welcome back. You're watching Talking Point. Rajesh Kothari is joining us now. He's founder and managing director of AlfAccurate Advisors, and we're speaking to him ahead of the budget excitement at a time when there's a lot of anticipation of what next. Rajesh, great to speak with you. First off, there is one section of the market which is anticipating and waiting for a big sell-off, either right before the budget or right after. Are you in that camp? What is your view on that? Let's begin with that.
I wish I would have known when it's going to come. But I think for every correct, I think the important point, that's a lighter note, but important thing to think is, are we looking for a correction or are we looking for a crash? Corrections are part of any normal markets. In fact, if you look at 2003 to 2008, the great Indian bull market, Sensex became 5 times in 5 years. There were 6 to 7 times when Sensex corrected by 20%. The index corrected by 20%, 6 times in that 5 years. So one should always be ready, be prepared. I think we always say that can come tomorrow. And every day we keep saying same thing, that correction can come tomorrow. But one should not worry too much about it till the time the earnings growth is strong, till the time the ROE and the return on capital employed of corporate India is strong, and till the time the GDP growth remains the fastest in the world. I think the valuation to some extent will remain premium. And to my mind, we are in a structural, secular bull market, at least for next 3 to 5 years. Any such correction, if it comes pre-budget, post-budget, today, tomorrow, day after tomorrow, I don't know when, take it as an opportunity and increase the allocation to equity as an asset class.
Okay, so that's the sort of overview. I must ask you, Rajesh, have you been taken a bit by surprise by what's happening with IT? Was it something you anticipated before the Q1 numbers came out, and do you think it's justified, the kind of run-up we're seeing, TCS, HCL Tech? We've heard from the management, Q1 traditionally weaker, so expectations were low. What do you make of what we're seeing?
Well, to be very frank, actually, if you look at it from the corporate perspective, there are no major changes in terms of their body language or in terms of their guidance, be it a banking's BFSI spend, be it a geography-wise spend, be it a TCV. In fact, TCV is a little bit down actually rather than up, or be it in terms of the margin guidance. I think if you ask me from the corporate perspective, there is no major change. But I think there are in large cap names, particularly be it IT or be it FMCG, even a 0.1%, 0.2% change we have seen historically leads to disproportionate impact on the markets. And that's how even this time the market has reacted like that. From last 3-4 months, we have been increasing our allocation to IT, although we remain underweight, not that we became bullish. But yes, we were thinking that it is going to happen. It is a question of time. Maybe 1 quarter, maybe 2 quarters, maybe 3, 4, 5, 6 months. You may not see much performance, but that's fine. We are more betting for the next year, where probably there is a likelihood of interest rate cut. And that's where, I think the market is looking like that. I don't think market is right now looking at what IT companies are talking about. IT companies are talking not negative, which is a positive by the market. But more importantly, market is reading into the inflation number, the CPI print of US, and the commentary by the US Fed, which has been talking about now inflation looks like coming under control, and therefore one rate cut may start from September. That's what market is hoping for, and that's why the IT stocks are going up, be it globally or therefore more in India as well.
Okay, so Indian IT companies actually following that trend, says Rajesh Kothari. But ahead of the budget, let's talk about specific areas of interest, Rajesh. And let me actually pose that question to you. Do you see the usual suspects responding positively, because this is a budget which is going to be focused on increased Capex, is going to lay the vision for the next 5-year term? So defense, rail, agri, consumption, are these themes that you find exciting right now?
Well, the first most important thing is probably, I think after 10 years, we are going to see a budget where you will not see the commentary next day of budget. When you invite all the big guys on your channel, probably they will not say it is a fine balance between A and B. This is the budget probably where government has enough financial room to make happy everyone. Be it a middle class citizens, or be it a consumer, or be it rural economy, or be it a capex. So this is not A over B. This time is going to be pro-growth, in my view. This time, government has enough room in terms of keeping fiscal deficit under control and still, make consumption to revive to a certain extent, and at the same time, capex theme to continue. So, all both the C's, capex side as well as consumption side is going to do probably government will make happy both these buckets after a very, very long time. I think probably first time in 10 years.
Okay, what would be your top 2 or 3 sectors or companies that you're looking at, Rajesh? As we wrap up, leave us something specific for our viewers.
Well, I think, capex and consumption, I think these two C's, I think these two C's are going to make the win on, probably budget will make it a little bit more relevant. Otherwise, nowadays, budget has lost importance because a lot of things government already announced through the, through the year rather than waiting for the budget day. So do not keep expectation very high. I think no negative will be the biggest positive, particularly from the capital gains tax perspective. That's number one. I think no negative will be considered as a positive to the market. Market will take it as a relief. And who knows if suppose something comes in terms of attracting the fixed deposits or some changes here or there, and that may act as a new catalyst for the market. We have to wait for the budget day. Otherwise, from sector perspective, two C's are going to do well: capital expenditure, that is capex story, and the consumption story.
All right, so the 2 C's are going to be in focus this budget, capex and consumption. Thank you so much, Rajesh Kothari, for speaking with us today. We've got a great overview on the show today on what you could expect from the budget, and the IT momentum also expected to continue. Thank you so much for joining us. You were watching Talking Point. I'll take a very short break, but a lot more coming up on the other side on NDTV Profit.